Welcome to the fascinating world of cryptocurrency, a digital or virtual form of money that uses cryptography for security, making it incredibly difficult to counterfeit. Cryptocurrencies represent a revolutionary shift in how we perceive and use money in the digital age. Unlike traditional currencies issued by governments known as fiat currencies, cryptocurrencies operate on a technology called blockchain. This technology is the backbone of all cryptocurrencies, ensuring that every transaction is secure and transparent. This decentralized technology is spread across numerous computers that manage and record transactions. Each computer or node in the network has a copy of the blockchain, making it nearly impossible to alter any information without consensus from the entire network. The appeal of this technology largely lies in its security. Blockchain's cryptographic nature ensures that once a transaction is recorded, it cannot be changed or tampered with, providing a high level of trust and integrity. The concept of cryptocurrencies first emerged in 2009 with the launch of Bitcoin by an anonymous entity known as Satoshi Nakamoto. Bitcoin was designed as a peer-to-peer electronic cash system, aiming to eliminate the need for intermediaries like banks. Since then, the crypto space has expanded rapidly with thousands of unique cryptocurrencies now available on the market. Each of these digital currencies serves different purposes, from facilitating transactions to powering decentralized applications. Investing in cryptocurrencies isn't just about buying digital coins, it involves understanding a complex ecosystem that operates quite differently from traditional financial systems. This ecosystem includes exchanges, wallets, mining operations, and regulatory frameworks. These digital assets have garnered attention for their potential to provide high returns. Early adopters of Bitcoin, for instance, have seen astronomical gains, sparking interest and investment from individuals and institutions alike. However, they are also known for their volatility, which can lead to significant losses. Prices can swing dramatically in short periods, influenced by market sentiment, regulatory news, and technological advancements. Therefore, entering the crypto market requires a deep understanding of its fundamental workings and a strategy to manage the inherent risks. Investors must stay informed and be prepared for the unpredictable nature of the market. The decentralized nature of blockchain technology is truly revolutionary. It removes the need for a central authority, allowing for peer-to-peer transactions that are faster, cheaper, and more secure. It ensures that transactions are transparent and immutable, meaning they cannot be altered once they are recorded. This transparency is a key feature that enhances the credibility and reliability of the entire system. This feature is crucial for building trust among users and is a core reason why many are drawn to cryptocurrencies. As more people understand and trust this technology, the adoption and integration of cryptocurrencies into everyday life continue to grow. The future of cryptocurrency is promising, with potential applications extending beyond just financial transactions. From smart contracts to decentralized finance, DeFi, and non-fungible tokens, NFTs, the possibilities are vast and continually evolving. As global adoption increases, cryptocurrencies could play a significant role in shaping the future of the digital economy. They offer a glimpse into a world where financial systems are more inclusive, transparent, and efficient. Educating oneself about cryptocurrencies is essential for anyone looking to invest or participate in this digital revolution. Understanding the technology, market dynamics, and potential risks will empower individuals to make informed decisions and harness the benefits of this groundbreaking innovation. The first step in investing in cryptocurrencies is actually buying them, and choosing the right platform is absolutely crucial. There are several types of platforms, including exchanges, brokerages, and direct trading platforms, each with its own set of features, security measures, and fees. Popular exchanges like Coinbase and Binance offer user-friendly interfaces that are ideal for beginners. When selecting a platform, it's important to consider its security features, such as two-factor authentication and the storage options it offers. Fees are another crucial factor. These can vary widely depending on the platform and can significantly affect your investment's profitability. Additionally, the availability of different cryptocurrencies and trading pairs can impact your trading strategies. Customer support is another critical aspect. The crypto market operates around the clock, and having access to timely support can be crucial, especially for beginners encountering issues. Lastly, the platform's reputation within the crypto community can provide insights into its reliability and performance. Understanding the interface and functionalities of your chosen platform is vital for effective trading. Take time to familiarize yourself with the platform's tools and resources, which can enhance your trading decisions. Once you've acquired cryptocurrencies, the journey doesn't end there. In fact, it's just the beginning. The next crucial step is to store them securely. This is where cryptocurrency wallets come into play. Cryptocurrency wallets come in various forms, each offering different levels of security and accessibility. Understanding these differences is key to protecting your digital assets. The main types of wallets are hardware wallets, software wallets, and paper wallets. Each has its unique features and benefits. Hardware wallets, such as the Ledger Nano S and Trezor, are considered the safest because they store cryptocurrencies offline, away from online threats. These devices are designed to be immune to computer viruses and hacking attempts. Software wallets, on the other hand, are more convenient for daily transactions but are less secure since they remain connected to the internet. This makes them more vulnerable to cyber attacks. Mobile and desktop wallets fall under this category. They offer ease of access and are user-friendly, making them popular among active traders. Paper wallets, which involve printing the public and private keys on paper, are a form of cold storage. They are secure as long as the paper is safe from physical damage and theft. However, they can be cumbersome to use for frequent transactions. Each type of wallet has its pros and cons, and the choice depends on your needs. For instance, hardware wallets are excellent for long-term storage, while software wallets are better for frequent trading. If you are holding cryptocurrencies as a long-term investment, hardware wallets are recommended. They provide the highest level of security and peace of mind. For active traders, software wallets offer more convenience. They allow quick access to your funds and facilitate easy transactions. Deciding on the right wallet is crucial in protecting your digital assets from hacks and theft. The security of your cryptocurrencies largely depends on the type of wallet you choose. Research and understand the security features of each wallet type before making a decision. This will help you make an informed choice that aligns with your investment strategy and security needs. Reading reviews and testimonials from other users can also provide valuable insights into the reliability and security of different wallets. Take your time to gather as much information as possible. Once you've chosen a wallet, follow the setup instructions carefully and adhere to all security protocols. This includes setting up strong passwords, enabling two-factor authentication, and keeping your recovery phrases secure. By taking these steps, you can ensure that your cryptocurrencies are stored safely and securely, giving you peace of mind as you navigate the world of digital assets. With the right wallet and security measures in place, you can confidently manage your cryptocurrency portfolio and focus on your investment goals. Section 4. Trading cryptocurrencies, strategies and tips. Trading cryptocurrencies can be highly profitable, but it comes with its set of risks. Developing a solid trading strategy is crucial. Some common strategies include day trading, where trades are executed within the same day, and swing trading, which involves holding positions for a period ranging from a few days to several weeks to capitalize on expected upward or downward market shifts. Understanding the factors that affect crypto prices is crucial. These include market demand, the number of coins in circulation, and external factors such as regulations and technological developments. Using technical analysis, traders can predict price movements and make informed decisions. However, this requires skills in reading market charts and understanding indicators. Risk management is another vital aspect of trading. It involves setting stop-loss orders to minimize potential losses and knowing when to take profits. Diversifying your investment portfolio can also reduce risk, as it spreads out potential points of failure. Stay updated with the latest market trends and news. The cryptocurrency market is highly volatile, and staying informed can help you make timely and effective trading decisions. Section 5. The role of market research in crypto trading. Market research is an essential tool for any cryptocurrency investor. It serves as the foundation upon which successful trading strategies are built. It involves gathering and analyzing information about the market, including trends, competitor performance, regulatory changes, and technological advancements. This comprehensive approach ensures that investors are well informed about the various factors that can influence the market. This research provides the insights needed to make informed investment decisions and develop effective trading strategies. By understanding the market dynamics, investors can better anticipate price movements and identify profitable opportunities. One of the key components of market research is technical analysis. This method involves studying past market data, primarily price and volume, to forecast future market behavior. Technical analysis helps traders identify patterns and trends that can indicate potential future price movements. This involves studying past market data, primarily price and volume, to forecast future market behavior. By analyzing historical data, traders can identify recurring patterns and trends that may provide clues about future market movements. Tools such as moving averages, RSI, relative strength index, and Fibonacci retracements can provide insights into market trends and potential reversal points. These tools help traders make more accurate predictions about where the market is headed. Fundamental analysis is another critical aspect, focusing on the intrinsic value of a cryptocurrency. This approach involves evaluating the underlying factors that contribute to a cryptocurrency's value, such as the project's technology, team, and market potential. This includes understanding the project behind the currency, its use cases, technology, market demand, and economic factors that could influence its value. By thoroughly researching these elements, investors can make more informed decisions about which cryptocurrencies to invest in. Combining both fundamental and technical analysis can provide a more comprehensive view of the market. By integrating these two approaches, investors can gain a deeper understanding of the market and make more informed trading decisions. Keep an objective perspective while conducting market research. It's important to remain unbiased and rely on factual information rather than emotions or hype. The hype and excitement in the crypto world can often lead to biased or unsubstantiated claims. Investors should be cautious and critically evaluate the information they come across. Rely on credible sources and data-driven insights for your research. By doing so, you can ensure that your investment decisions are based on solid information and not on speculation or rumors. Collaborating with other analysts and traders can also provide valuable insights and different perspectives. Sharing knowledge and discussing market trends can help you stay informed and make better trading decisions. In conclusion, market research is a vital component of successful cryptocurrency trading. By utilizing both technical and fundamental analysis, staying objective and relying on credible sources, investors can navigate the volatile crypto market with greater confidence and make more informed investment decisions.